This video/stream is sponsored by Trader Central. Trader Central provides funding for traders, spot cryptocurrency exchange services, and access to trading tools like copy trade software, portfolio tracking, and a social platform exclusive for communicating with trader friends. Sign up now using the link in the description and get up to 30% off on your first plan.
Network is a little bit lagging. I'm sure everyone can hear me now. So if you can hear me, just type number 1 on the chat box. If you cannot hear me, sorry about the delays and all that. Drop number 1 on the chat box if you can hear me clearly. Just want to be sure we are all on check. This happens most of the time. I don't know. This my network service are better up their game. Okay, thank you guys. I'm super excited that you all can hear me. And I love the fact that you still stick around despite the few minutes last we're having, like, let's say about 7 minutes. So thank you guys. I appreciate you guys for still sticking around. Okay, thank you. So in today's live session, I'm just going to be going over what I'm currently looking at. So before coming on live here, I sent a signal to my trading channel, which is 5 Pips FS. So if you want to be a part of that trading channel on Telegram, or you can follow me on Instagram, and you can also follow me on Telegram. The links are all in the description box. So just expand the description box, and there you can have access to it. Okay, you can get access to that, and then you join us in Start Pipping. So I sent a signal to go short. So most people were thinking it's going to go buy and all of that, which is normal. People always antagonize your whatever you are. They always want to antagonize whatever opinion you've got. So it happens, and now you can see price really tanking, and more is still to come. So you see a very fantastic time to still go short. So since the trade is really still active right now, and I want to talk about it. Okay, let me talk about a bit about it. And I shared this too with the team, those who are trading with me live. So I shared it with them, but it's not to be traded because I don't think you guys shouldn't be trading it, because I'm not advising to be trading, because it's Monday. You guys already understand how I trade. I don't trade on Mondays, and plus it's US bank holiday today. Today is Juneteenth, National Independence Day in the United States. So all banks are going to be closed in observance of that. So we should just know market might be very volatile because there are less participants. The US banks are not going to be involved. So I send the signal from this box, you should go short, and then we should still be going short. So this up spike made some people fear and start thinking that it's an up move. No, it's not so fast. Let me remove this forecast too so you guys can see my analysis. So price was from here to go down. Now, why am I thinking that price is going to go down? I'm just telling you what's happening right now. So if you want to trade conservatively, I will obviously not advise to start stacking this time around. Do not stack today. If you must trade, just trade with 0.01 with 1 entry, just to see whether or not it plays out just as I'm predicting. That's all you just want to do in order for you to build your confidence. All right. So if you want to do that, that's fine. But if you want to start trading using heavy lot size and start taking unnecessary risks today, it's not worth it. It's not worth it. Don't do that, because I myself, I'm not even doing that. All right. So just approach it with the proper mindset, because here's the message. I think I sent a message regarding that. This was the message I sent. I said, this is the analysis that I sent here. It was on a shorter time. Then I said, apart from the fact that today is Monday and US bank holiday, this is a 4/4 confidence to go short. Just signing for educational purpose, not to be traded. So I'm only sharing. So you guys, whenever you see a similar pattern or a similar conferences happen, maybe later in the future, you know how to react. You know, okay, this is a short, not a long. Okay. So that's why I'm sharing for this educational content, educational purpose. Please take it for what it is. Don't trade it. Just understand what it is. But if you must trade it, just trade with 0.01. Just watch so you can keep track of the outcome. All right. I think that's good. So I'm sure you already know how we always do it. We are going to be having the signal provider for last week in our Telegram channel to come present today. So today I'm having Peter Osifo. So he's going to be introducing himself and be going over the signals him and his teammates provided for last week. So Peter, how are you doing?
Yeah, I'm great, boss. Hope you're good.
You're really looking amazing. I love your lighting and everything.
Thank you.
Nice.
Thank you very much.
So how many signals did you guys provide last week?
All right, I provided 3 signals last week. Just 3 signals.
And it was fire. I remember bang. It was so lit that everyone in the group and the teammate, they all felt it. Nice. Okay, so you want to walk us through the signals, correct?
Yes, I do.
All right, please go ahead. Take it away. Sure.
All right, can everyone see my screen?
Can everyone see my screen?
All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can everyone see my screen? All right, can every
Yes, we can see it clean.
Can everyone see my screen?
Clean. Yes, we can. We can.
All
They are
right, all
replying.
right, all right, all right. Greetings to everyone. Thank you very much for joining us here today, and thank you very much to my boss Jeffrey Benson for the opportunity to be here today. So, before I go on, very quickly, I'm very sure most of us already know um, Jeffrey Benson's strategy, which is actually what we all trade at Fire
Right.
Pips.
Sorry,
And
Peter. Can you just give me 1 sec? Just sorry, 1 sec. I want people to
okay,
introduce themselves and where they are joining us from.
okay,
I'm
all
joining
right,
from
no
Lagos,
problem.
Nigeria. What about you, Peter? Where are you joining us from?
I'm joining from Lagos, Nigeria as well.
Okay, thank you very much. So while Mr. Peter continues with his presentation and showing us what he saw, you guys just drop your locations, then I can display that on the screen while he's going on. So just go ahead, take it away. Thank you very much.
All right. Yeah, as I was saying earlier, so I'm very sure most of us are already familiar with Jeffrey Benson's strategy, which is what we all trade at Fire Pips. I'm very sure we are all aware that we trade only one pair, which is GBP USD. And on this particular pair, we look out for four things. Actually, we look out for four confluences, of which at least three of them need to align before we take a trade. So these confluences are the trend line, the high and low of the week, the psychological levels, and the W and M pattern. So I won't start going over that all over again in order to save time, but I'm sure we have most of us are familiar with that already. So at the beginning of every new week, the very first thing we do is to mark out our high and low of the week. Our high and low of the week are our first two 4 hour candles for the week. So on a Monday, before we take any trade, before we do anything, the very first thing we do is we take note of the first 4 hour candle and the second 4 hour candle. Now, among these two candles, whichever one has the highest point, we mark it out, and whichever one has the lowest point, we mark it out. So it's very simple to do that. What we need to do in order to get that done is to go to settings. When we get to settings here, we just toggle on what is known as session breaks under appearance. From settings, you navigate down to appearance and you toggle on what is known as session breaks. The session breaks tool helps us to divide our days. So the space in between each line signifies one day. The space between this line and this line is one day. The space between this line and this line is one day. So last week Monday was the 13th of June. Last week Monday was the 13th of June. Now, if I zoom in here, yes. So if you zoom in on your charts to the 13th of June, you will see that from this particular line, this is where the 13th of June began from, this particular line. And then this was the first 4 hour candle here. Let me try to zoom in a little bit more. All right, this was the first 4 hour candle here, and this was the second 4 hour candle. Let me remove this. Yes, this was the second 4 hour candle. Now, these two candles are going to help us determine our high and low of the week. So what we just need to do from here is that the highest point of these two candles, which is this, signifies our high of the week. So you can just come to your drawing bar here and pick out your horizontal ray. So this is my horizontal ray. I just need to mark out this point. This point is my high of the week, and then the lowest points of these two candles, which is this actually, this happens to be our low of the week. So we just mark out those 2 points. This is the very first thing we do before we even take any trade. And then what we believe is that the high and low of the week will help us determine our directional bias. Now, how does it help us determine our directional bias? It is true. Sorry. Let me try to zoom in again. All right. So after the high and low of the week have been mapped out, we're able to determine our directional bias through a breakout candle, which we call the decision candle. So after the high and low of the week have been marked out, we look for a candle that breaks either to the upside or to the downside significantly. Now, when I mean a break, I don't just mean, for example, if we look at this, we can see that a wick came out of here. This is not a breakout candle. We want to see a significant break either to the upside or to the downside. And usually, we want that breakout to be at least 50 pips. At least 50 pips. So like I said, we can see that this week came out here, but this is actually not our breakout candle. This is our breakout candle. We can see how this candle significantly broke below the low of the week. And then if you come here and pick up our measuring tool from the low of the week to where this candle closed, we'll see that this candle closed at around 59 pips, which is good enough for us. We're looking out for a breakout that is at least 50 pips. So this was our decision candle, which broke below our low of the week. And from the strategy, this already told us that we're going to have more of sales for this week. So what that meant for us was actually not that we won't be looking for buys at all, but for the most part, we'll be having more of sales, and the stronger moves for that week are going to be sales. So we had a bearish bias generally for the week. So that's it for the 4-hour candle. That's it for the high and low of the week rather. And of course, we have our psychological levels marked out already. Our psychological levels as
you know what? Can you make your chart a lot more clearer? People are saying that they don't know, they can't see your chart clearly. That by shrinking the bar that you're using, the watch list bar, shrink it by that.
Okay. All right.
Okay, and then can you make your background white so it can be more visible for those who are on phone?
Okay.
And then just turn on your auto so it doesn't shift. If you want to zoom in, use the plus and minus sign. And also let us know for how long you've joined the mentorship. So people want to know how long you've joined the mentorship. You take it away from there. Thank you very much. You're doing a nice job.
All right. I think it's better now.
Better.
Okay. Okay. So I've been on Fire Pips since February. I can't remember the date precise, but I remember I think first week of February or so. But since February, I've been on Fire Pips group since February. Sorry?
February 2022 this year.
Yes, February 2022 this year. Yes, February 2022 this year. All right. So as
trades you took using TradingView Replay.
All right. Yeah. Sorry, I would not be able to use TradingView Replay today. I'm currently not on the premium plan right now.
Oh.
Yes, I was, but it recently expired. So I apologize for that. So let's just make do with what we have here. So as I was saying earlier, after you've marked out the high and low of the week, of course, you want to make sure that your psychological levels are correctly marked out. Now, your psychological levels are round up numbers in increments and in increments of 50. So if you're starting from, let's say you have a round up number at 1.2100. Let me adjust that. Yeah, 1.21000. Now we calculate 50 pips from there. So from 1.21000, if you calculate 50 pips, the next psychological level is 1.21500, like that. So from 1.21500, we move up to 1.2200, like that, in increments of 50 pips for GBP USD. So of course, after you've done that, the next thing you want to mark out are your trend lines. So to make things easier, you might just want to mark out your trend lines starting from the higher time frame, of which the higher time frame that we use is the 4-hour time frame. So you mark out your obvious trend lines, and of course, as you scale in lower, you want to mark out the trend lines as you go lower. So from the 4-hour time frame, when you mark out your significant trend lines on the 4-hour time frame, you scale lower to the 1-hour time frame, you mark out your trend lines, and then of course the 15 minutes time frame, which is our entry time frame. So these are the most significant trend lines I'm seeing right now. There's one that's, I apologize for some of the marks I have here. I just use it to indicate the trades that I won and the trades I lost. So this is one trend line. We have a touch here and we have another touch here. And then there's another trend line at the bottom as well. We have one touch here, we have another touch here. So usually for us to take a trade on the trend line, we usually want to see, for a trend line to be valid, we usually want to see at least 2 touches, but then we're looking to enter on the touch of the trend line. Yeah, so that's it. If we scale out to the 1-hour time frame, yeah, we can still see the same trend line actually.
I'm not giving that a lot of information. That's the trades. Can you show us
Okay,
the
okay,
trades? The
okay. All
trades.
right, all
You're
right,
giving too many
all
things.
right,
Don't
all
blow
right,
their
all
head
right. No
off.
problem.
Let's give them the
All right, no
trades with
problem.
you.
All right. All right, no problem. So down to 18 minutes time frame, which is our entry time frame. So I actually took 5 trades last week, but on the group I actually just called 3 trades. I actually just called 3 trades. So let's go to the very first trade I called, which was on Monday. Yeah, which was on Monday. All right, so this was the very first trade I called on Monday. Now, why did I take this trade? First of all, I was able to connect the trend line from here. This was the first touch of the trend line. This was the second touch of the trend line. Now, when I wanted to take this trade, I actually, this was a trend line. This was a psychological level. So I was looking for a W and sorry, an M pattern rather. Yeah, an M pattern to go short. I was looking for an M pattern. I marked out this zone, and what I was expecting was that after this drop had happened, price would come back here, and then I would go short from here. But then when this green candle came up, I was watching this candle closely, and then I began to see significant rejections from this area. And then on going back to see that one touch had already happened here, another touch had already happened here, it was sensible of me to assume that this was the third touch of the trend line. And then a lot of times we actually look for that M pattern, we all want to see that obvious M pattern, but the truth is a lot of times it doesn't usually happen that way. So I like to look at it as either an M pattern or a kind of double top. And a lot of times what actually happens is that even if it doesn't get to the equal points that the previous high was, it might just touch the trend line for the third time. But then again, it's important to see how price reacts around that area. Seeing also that this happens to be our high of the week. So this particular trade, we had the high of the week, we had the psychological level, and then we had this, which I interpreted as an M pattern. So as the price pushed up here and I began to see a bit of rejection, I got in here and then I took this trade and closed out somewhere around here. This was a 1 to 3 risk to reward ratio trade. Actually, I wanted to close out around here because this was the next psychological level in order to be safe. But then when I saw price broke through here, I decided that if price closes below this psychological level, I would hold. And then price actually closed below it. So I held on up until this point. I got out around here when I saw this weak rejection at this point. So that was the only trade I called on Monday. After I took this, I was done for the day. And then I left I left the charts till the following day. So the following day was the 14th, that was Tuesday. So on Tuesday as well, I went short again. Now what did I see? Now from this same very point where the first where I drew the first trend line, this was my first touch of the trend line, and then coming down, this was the second touch of the trend line. Now at this very point, we also had our high of the week, we had a psychological level. So I just decided to wait for an M pattern. Now the thing is, looking at it at this point, if we had a third touch on this trend line already, it should have been valid enough to go short already, even without waiting for the M pattern. But I just like to wait for the M pattern and W pattern as a double confirmation. So as this happens, um, I waited for the M pattern to form, and then price came up here, and then I actually got in around here when I saw this small rejection, which was a little bit early. As we can all see, price later wicked up. Price actually wicked up to this point. So this is actually where I should just have been getting in. Yeah, this is actually where I should just have been getting in. But I was in already around here. My stop loss was 20 pips, and then price wicked up, and then this strong rejection happened off our psychological level and our high of the week. And then price came down here. I got out at a 1 to 1.5. This was where I got out. I got out around here when I saw this rejection. But then, as we can see, even if you didn't get in at this point, price gave a second opportunity to get in as price came back here again to form another M pattern. So if you're looking at it this way, we see that this drop was the first okay, this was the first leg, then it went up here, then came down, then formed this again. So this was another point that you could have entered. Drawing the trend line from up, you decided to draw the trend line from up again. Yeah, you decided to draw the trend line from up. and then it also connected somewhere around here.
You know what? You want to click toggle on the auto
So, but
function. So,
then,
so you have toggle on the auto function on your trading view, so you don't have to start squabbling around the charts. So we can't see the
okay,
bottom
okay,
right now. We can't see the bottom. We can't see the top. We're just at the middle.
okay,
Yeah. So you just have
okay,
to do just zoom in and zoom out using your two fingers to swipe on your trackpad.
okay, okay. Um, Sorry. Okay, yes. So as I was saying, yeah, I actually got in this trade and got out somewhere around here. But if you didn't get in here, this was another opportunity to get in. This was an M pattern or a double top, if you like. And then this was also a high of the week and the psychological level. And as you can see, price dropped from this point. Price dropped continuously from this point. So this was the only trade I took on Tuesday. So that was all for Tuesday. Then going on to Wednesday. Yeah, that was the 15th, Wednesday, this particular day. So this particular trade was a loss actually. This particular trade was a loss. It's not always easy. We take losses as well. So this particular trade, from the top here, I was able to see one touch of the trend line. Let me adjust it well. Okay, I was able to see one touch of this trend line. I saw another touch here. So I already had two touches. So what I had in mind was that if I have a third touch here and after price rejected here, I wanted price to come here. As you can see, I marked out this zone. So what I had in mind was that let's assume there's an overextension to this point, and then I begin to see bearish momentum from here. I would get in again for a sell. Now, this particular trade, I used the advantage of knowing the general bias for the week as an advantage because even without before we even go into the directional bias based on the high and low of the week, the market was very clearly bearish for that week. It was very clearly bearish. So what I had in mind was okay. Once price gets here and I see some bearish momentum, I will just get in and continue with the trend. So as you can see, as this particular week came here, as the candle wicked up here, I got in here and the price dropped for a bit. But then as you can see, price went back up and killed my stop loss. So that was the trade I took for Wednesday, which was a loss. So Monday and Tuesday we made profits. Wednesday was a loss. So those were the three trades I actually called, but then those were not all the trades I took. There was another trade I took the following day, which was on Thursday. Yes, which was on Thursday. So this particular trade, I took it on Thursday evening, but I didn't call it on the group chat. It was actually late that day. This was already around 5. Most of us don't even trade after 5. I myself wouldn't even have traded that day, but I just happened to be looking at the charts that day, and I saw this very clean setup. So when I went up to the 4-hour time frame, I was able to see. Sorry, 1 minute. I think it was 1 hour. Okay. Yes. So I was able to see that um, we had a touch here. We had a touch here, and then as I saw this touch, I scaled down to the 15 minutes. So when I scaled down to the 15 minutes, I saw that on the 15 minutes, sorry, Yes, I saw on the 15 minutes, we had already had two touches. This is the first touch, this is the second touch. So I went back to that very day, um, which was a Thursday. Yes, I went back to that very day and I saw that there was a psychological level close by. Then this particular candle formed the third touch. So as this happened, as price went down and then came up to give an M pattern, everything was just looking too clean. So actually this particular day, like I said, it was late. So what I told myself that it was okay, if I lose this trade, the following day, which was Friday, I would only have one more trade to take. Usually I'm supposed to take two trades for the day, but I'll just trade just once if I lose this trade. And then I got in right here, and as you can see, price dropped. I actually targeted the 1 to 10 risk to reward ratio for this trade. It was actually crazy. But then I got in somewhere around here. This was where I got out, somewhere around here. As I saw the weak rejections around here, I got out. So this was a 1 to 6, this was 1 to 6 risk to reward ratio trade. And then the last trade I
Wow.
took on Friday, I'm sure most of us took that trade as well.
1 to
Sorry?
6 risk to reward. 1 to 6 risk to
Exactly, 1
reward.
to 6. Exactly,
Wow.
this
So
is
let's
it,
take
1
some
to
questions
6
that we
risk
are
to
seeing right
reward.
here. Let's take some
Okay,
questions I'm seeing right here, so we can just carry them all along. Let me stop sharing your
all
screen,
right,
and then we just have.
all right,
I want you to answer this question. I know you're directing this question to me, but I know these are things that we
all
already
right,
we've talked about this thing over and over again. So I'm sure you can check all these things.
all
I know
right,
you very well.
all
So,
right,
so someone is
all right.
asking right now. This is from Osai. He said, on which time frame do one look for entry signals? Just answer that.
All right, our entry time frame is the 15 minutes time frame. The 15 minutes time frame is our entry time frame. Yeah.
Okay, good. So we've got another one again from Zach Yusuf. He said, when do you get convinced to exit a trade? This is basically talking about exit.
All right. So when it comes to exiting a trade, now the first thing is before you enter a trade, um, you should have a point where you already are thinking of going out based on your risk to reward. Are you targeting a 1 to 1? Are you targeting a 1 to 2 and all that? So, but then something that is even more powerful when it comes to this strategy is something that is called weak rejection. So, not without even thinking of where you've decided to go out, whether you want to go out at a 1 to 5 risk to reward and all that. When you see significant weak rejections, particularly when it's close to an important area. So let me use this as an example. So I said I got in on this particular trade around here, and I wanted to hold it for a 1 to 10 risk to reward. But as we can see at this very point, this is 1.22500, which is a psychological level.
Correct.
Yes, 1.22500. So, and as we can see, as price was approaching this area, we began to see weak rejections. This was the first weak rejection. This was the second weak rejection. This was the third weak rejection. I mean, there was nothing that should make me doubt that price was actually going to reverse from this point. So that's it. So when you see weak rejections at significant areas, that's when you should be looking to get out.
Amazing. So this is from Bendu Blessed. Okay, this is just like commending you. Say just February, see analysis, guys. You are good. Yes, it's really good. He explains very well and it's super, super, super good. This is just one of them. There are a lot of them like that in the mentorship. In order for you to be part of the mentorship, just simple, just visit what's scrolling right now at the bottom of your screen, firepipsfs.com. So I'm going to talk about this towards the end of today's live stream. So just stick around if you want to hear more about the mentorship. If you've got a question regarding that too, you should let us know. So look at this. He said the high and low of the week is wrong. Maybe Oka for Simon is looking at the high and low of the week he just drew is for last week. He's discussing about the trades he sent for last week. So you guys can know how to better approach this week's one. So it's not wrong. So just look at that. Look out for that. Okay. Okay. So that's good. So someone is asking. So what do you mean by 1 to 1 risk to reward? Please can you explain that?
All right. So now when it comes to risk management in Forex, so the thing is, in order to give yourself an advantage, one thing we usually try to do is to make sure that when we are making profits, we are making more profits than the losses that we take. So what that helps us to do is because we know that in the Forex market, losses are part of the game. You cannot actually do without losing. But then what you can do is give yourself an advantage by making sure that each time you are making profits, you are making at least twice the losses that you take. So what that means is, for example, if every day I'm set to risk, let's say 1% of my $10,000 account, which is $100, for example, each time that I make profits, I try to target $200, and then each time I'm losing only $100. Now, at the end of the day, what that helps me to do is that even if I have a 50% win rate, which means that I lose 50% of the time and I win 50% of the time, because I am making twice as much each time that I win, and losing only once as much, only 1%. What helps me to do is that I still stay in profit. So I don't want to go too long into that without, so I won't waste too much time. But you can just do a small calculation by yourself. So you can just say, okay, if you have you can select any amount you want. Let's say a $10,000 account, for example. So try to calculate 10 trades where you win 5 trades and you lose 5 trades. But each time that you're losing, each time you lost in the 5 trades, you lost only 1%. But each
Yeah.
time that you won, you actually won 2%. Now, at the end of the 10 trades, you now minus the profit, the losses from the profits. You will see that you are still going to be up. So that's
All
what
right.
risk to reward ratio is. Yes.
Now, talking about risk, someone just asked another question. That is from Vipin Gao. He says, is it okay to risk 5% per trade on a 100 USD account for those who are trading small accounts? Very relative question.
All right. So the thing, so like you said, yeah, it's very relative actually. Now, relative to what? Relative to the account size. So on a $100 account, I mean, we want to make money. 5% of a $100 account is just $5.
Five.
Am I correct? It's just $5.
Correct.
So in fact, I think it's even relatively small, but I mean, I think it's okay to risk on a $100 account since it's a small account. Yes.
Yeah. Okay, so thank you. So someone else he said, please, how do you scale in? I don't want you to answer that because that's really something that you have to come on mentorship to really understand. Okay, talking
Yeah.
about stacking and all of that thing.
Yeah. Yeah. Definitely.
Okay, nice. So we've got someone just like say nice explanation. Of course, Peter Osifo
Thank you very much.
is really good. I mean,
Yeah.
okay, someone is also asking again. When entering the trade, do you enter when the M or W has finished forming, or do you enter when the second leg of the M or W is now forming?
All right. So for me, what I do is that, so the thing is, there are two entries. There's a conservative entry, and then there's a more sniper entry. So when you are starting out for the conservative entry, you want to wait to see a significant candle pattern form. Let me give you an example here. So as we can see this M pattern here. Now for the conservative entry, this is where I would have entered. Why will I have entered here? Because we can see a candlestick pattern which is known as the bearish engulfing. Let me remove this eclipse. This candlestick pattern, which is known as a bearish engulfing, had formed fully around here. So at this point, you will be more convinced that price is going to drop from here. So, but then I sincerely, I do not wait for the full candle to form. What I do is I enter while the second leg of the M or W is forming. But then I don't just enter like that. I wait to see weak rejection. So this is where I got in, like I said. Why did I get in here? I saw price rejected already knowing that this is a significant point because I had a trend line around here. I had a psychological level around here. After I saw this first week rejection, I entered on this second week rejection. So that's it. So you can either enter the conservative way or you enter the more sniper way. So, but starting out, I advise to always go with the conservative way. Yeah.
Okay, amazing. So I'm still trying to scan through some very, very important questions in the comment section. Someone is saying you should teach how to of the week. I mean, he has done that before. If you can just recap this video, once this video stops, it's live streaming right now on YouTube. So when we stop, it should be uploaded automatically. So just go over his first teachings. You're going to see that right there. And again, if you want to be a part of our Telegram channel where we touch about all these things over and over again on our YouTube channel, the links are in the description box. Expand the description box. You're going to be seeing the links there to join us on our various platforms. So can you just share with us what are the lessons you learned from last week's trade? Lessons you
All
learned
right.
from last week's trade.
All right. I think there was just one major lesson I learned from last week's trade, and the lesson was about my entries. I need to be more careful about my entries. So this particular trade that I lost last week, this particular trade, the truth is this wasn't the best of entries, and I also got into early. On this trade, and I feel like that was why I lost. There was another trade also that I didn't lose, but price went against me to some extent. Yes, this particular one, like I said, this is where if I was going to get my sniper entry, I should have gotten it somewhere around here. After price went up and rejected, I got in here already, but because my stop loss was 20 pips, so it didn't actually hit my stop loss. So I just need to be more careful about my entries. I don't need to be in a hurry to get in. I need to calm down and be patient. And I need to give myself that mindset that, okay, it's okay if I miss out on this trade. Another trade is there for me. Like, this is not the last trade in the Forex market. Another trade will come tomorrow. Another trade will come later in the week. it's okay for me to miss out on this trade. So, and I wrote that in my journal as well. That was the most important lesson I learned last week. It's okay for me to miss out on the trades. I need to be sure I'm getting in at the right time. Yeah.
Okay, amazing. So, guys, stick around to the end of this video because I'm going to be giving a quick analysis on GBPUSD, what we should be looking at right now and for this week, and how I'm currently going to be trading it for this week. All right. So, will you mind sharing with us your social media handle? Are you active on Instagram?
All right. I'm very active on Instagram. My
Okay.
Instagram handle is Peter__Osifo. Osifo is
Just type
OSIFO.
that out on your screen. Just open a new note and just type it out. That would really help
Okay.
us.
Um. Okay. Let me quickly do that.
Can I ask for a request? Will you be down for a live today? Would you like to go live with me today so we can explain some more things to the community? I see they love how you're presenting things. I'll
Yes.
be
Yes.
down to
Yes. I would love. I would
maybe.
love that, boss. I would love that.
Okay, so guys, go follow me on Instagram. Just hold on, let me share something with you guys real quick. Guys, go follow me on Instagram. I'm going to be going live with Peter Osifo right here on Instagram today. So that's going to be happening my time. This is my Instagram, Jeffrey_Benson. Okay. So once you follow me on here, which is also going to be sharing this now, you can also as well go follow him too.
Yeah. Let me just
And
let me type it on the chat here.
all right, go ahead, please. So we're going to be going live. That's around this evening. I'm going to be announcing that on my story. So just stay tuned on my story. We'll be going live and we'll be breaking down what we are thinking for next week. Next tomorrow's trades, the next day's trade.
Um,
All right.
I'm coming.
So go ahead and type it out.
Okay. Um. It's not showing on this chat. So.
Just type it maybe on your chat. Then I can drop it for them here. Okay, go ahead and type it.
Okay. Okay. This is Microsoft Word. Let me type it here.
Okay.
Yeah. This is it. Peter__Osifo. This is my Instagram handle.
Peter__.
Yeah.
Okay, good. On Instagram. So I'm typing it out on the comment section. So people just go follow you.
All right.
Instagram. Okay, nice. So whilst for those who want to follow me, the link is also in the description box. You can check out mine too. To follow me on Instagram. But just hold on. I'm still going to be talking about. Don't go yet. I'm yet to talk about what you should be trading now. I'm about to give you a straight signal. All right. So thank you very much, Peter, for coming on. Really
All right.
appreciate
Thank you,
you.
boss. Thank you.
All right, you're welcome. So going further, I'm going to be sharing with you right now what you guys should be doing on GBPUSD. If not for the fact that today is United States holiday, I would have loved us to trade. And plus, today is Monday. All right. So that's on Mondays I don't love to trade because Mondays are directional bias day. All right. Thank you. So I can see many other people questions are dropping in the comment section talking about mentorship. I'm going to talk about that after we pick trade. I want us all to make money right now. If you want to make money or you just want to know the direction where the market is headed, let's talk about that before we move on to the next. All right. So I'll be sharing the screen. I'm sure everyone else can see here. Can you all see? Can you all see? Is that correct? So let me add this one to the screen. Okay, good. So right here today we had I'm sharing from my second PC, so I might just be looking somewhere like here. Okay, just now I'm looking at the other bigger screen because things are a lot more clearer there. So I sent an analysis to go short here. Now, why did I send this analysis? Here are some things that you should know. The first thing is I just head straight to my 4-hour time frame. I bring up my session breaks button, my session break, this grid line that you can see right here on the 4-hour time frame. So this is on GBPUSD, and as a matter of fact, that's the only pair that I trade. So for those who are seeing me for the first time, yes, it is GBPUSD that I trade. And if you want to be that kind of person, you want to be a king of one pair and cashing out, making crazy money every now and then, smash the subscribe button and also like this video so this video can be recommended to many other people who really want to take their trading journey really seriously. So here are the concept that I just trade with. Very simple. I love straight to the point. I don't like things too complex. So the things I look out for every day that I wake up every new week is to look out for 2 first candles that form for the week. How do I know that? It's through the session break, which is what he explained. So this is the first candle, this is the second candle. So I'm going to note the highest of either of them. So this is the highest point either of these candles ever went to, and this is the lowest point either of them two also got to. So let me put that straight there. So I'm sure everyone else can see, even when you're on the phone, you can see this clearly. All right. So with that said, the next thing, that's what I'm just going to do. So this concept simply states, whenever I've been able to map out the highest of either of these two kinds, first I've mapped them out. Then the next thing is I have to look out for the next candle that breaks out of either this upper one or this lower one. So if we have a candle that breaks out, right now we don't have a breakout here because this candle has not closed. We are looking for a candle that the body closes above the high or the body closes above the low. So if we have the first one that closes above the low, we are going to be having more of sales for this week. But if we have the opposite, we're going to be having more buys. So that's what this concept says. But there's exception to the rule. I'm not going to be going over the exception right now, but let's just go with the whole concept. So my forecast right now, market structure wise, we are on a downtrend. Of course, everyone knows that. Like most of the market, even cryptocurrency, everything is tanking. GBP USD, we are on a downtrend, massive downtrend. If I keep shrinking my chart, even an amateur who is not a trader will tell you, oh, okay. But I just tell them to identify what's currently going on in this chart. We just say, oh, I don't know what's going on, but I can see a slopey downward movement. Everyone can tell. That's on the main trend. But 1 hour time frame, structure-wise, will also tell us that, okay, it is true we're on a downtrend, but however, we are currently having an upward retracement. It's pushing up. That's what someone will also tell you, because this is an impulsive move to the downside. So this is a huge retracement. It drops right here. This is a retracement. So we're expecting a no drop. Okay, so that's what 1 hour is telling us. It's very, very clear, structure-wise. Then on 15 minutes time frame, where we do our major entry, our main entries. Now let me remove this grid line so our chart doesn't really look messy. I'm going to remove the session break. Now we have a clean chart right there. So let me zoom in. Sorry, I've got cough. So at this point, these are the things that I saw that is making me to want to go short. If not for the holiday, but it's Monday, it's a nice conference to go short. Now we work with trading conferences. When I talk about trading conferences, like I need at least 3 things or 4 things to tell me to go short before I go short, before I take the action. Or I need 3 or 4 things to go long before I take the action. You see now, that's what I mean. That's what we mean by conferences. So at this point, there are about 4 things telling me to go short right now. So we saw the psychological level, which is 1.22500. That's the psychological level right here, this number. So psychological levels are really important because banks hedges, they pay attention to them. These are levels that, around up levels that whenever price get there, there's always a reaction. Now, let me show you some example. So that's what you see kind of like the blue lines all around in my chart. This one right here, this blue one, blue line, this blue horizontal line. Yeah, those are psychological levels. So you can see immediately price got to this point. What happened? What do you think happened right here? Price go here. See, price. Sorry about that. Immediately price got there. What happened? Drop. Price got here. What happened? We also saw a drop right here. All right. So what do you think is also going to happen now that price is touching this point? Yeah, it's not just guesswork. Price is touching this point. What do you think is going to happen? We're likely going to have drop, but because it's a holiday, we might have some hesitation, just like we had hesitation right here before the drop. But the thing is, it is what it is. It's definitely still going to drop because no matter how far or how long this hesitation go, I mean, this is a key level. Not just that right now. We also have the high of the week right here. So anytime price either breaks up to the high of the week, touches high of the week, there's going to be a reaction, like a snap. A snap, either the low of the week or the high of the week. There's always going to be like a snap, like rubber band expansion. There's always going to be a snap. You know, the more you expand the rubber band, and if you leave it, the snapback effect is going to be more based on the degree at which you expand it. So that's what is going to be happening right here. So the more the consolidation we are going to be having at this point, the more people are going to be gathering at that point. That level is going to be interesting more investors. It's going to be more interesting to more investors than coming in and then they can put in their order. So I'm just speculating that we're going to be having more of sales coming in. So price is definitely going to tank based on my analysis right now. So here's my analysis to you. That's my advice to you for someone. Now, Jeff, should we just go in on a short since you are predicting the price is going to drop right now? Yes. If you can go in right now for a short, it would be a nice decision. But what I'm begging you to do, because it's Monday and plus it's holiday, go in with a smaller lot size. Now, talking about smaller lot size and what lot size should you go in with, these are things that are very exclusive to my students. But I mean, I'm in a very good mood today. I'm really happy. And in the spirit of holiday and celebration with the United States, I'm willing to share them with you. So just come to Baby Pips Position Size Calculator, this URL link right here on your screen, and then just go there, position size calculator. I mean, it's pretty simple. You're going to have this calculation thingy right on your screen. So let me drop this for those who want to visit this same place and do the exact calculation. So this is also going to be included in the description box for those who are going to be watching on later date. You can check this out on later date on the description box. So talking about position size calculator, so you have to put in your account balance. Like let's say for example, I'm currently trading an account of $10,000. Of course, I trade more than that, but just for example, for ease of calculation, then the risk percentage you want to put in is you want to ask yourself, oh Jeff, how much am I willing to risk today? How much percentage do I want to put on this account? That is really, really key. So very interesting thing about mentorship is I can teach you everything. I can teach you the risk management, but I can't do this part for you. I'll teach you how to do it, but I can't do it for you. So the decision is still left to you, still in your hands. So you decide how much risk you want to put on. But what I do recommend always, do not risk more than 1% of your account at a time. So I'm going to be giving out 1% of this account. All right. And average stop loss we always use. Also someone earlier while Peter Osifo was talking, you were asking what is the average stop loss we recommend. It's always 20 pips. So you have to select the currency pair. Of course, it's GBPs that I trade. So if you have someone that trade any other pair, you can just select any other pair right here. And I hit calculate. So hitting on calculate is going to give me the amount that will be at risk. What it simply means is if this trade that I'm about to take right now with source against me 20 pips, I'm going to be down $100 on the $10,000 account. Then the next question that's going to come to my head is, Jeff, am I willing to lose $100 today being Monday? If it's a no, don't trade the trade. If it's a yes, go ahead and take the trade. If it's a no, then how much are you willing to want to risk? Okay, so if it's $50, then you have to drop the risk by percentage, or you have to make sure you tighten the stop loss if there's a room for that. Okay, but don't tighten the stop loss based on your own greed because you want to be able to make more money or you are willing. No, tighten the stop. Use stop loss based off levels. Okay, that's a topic for another day. All right, so now we have $100 at risk, and I mean I'm willing to risk that. So I just go on my MT4 and put 0.5 on my MT4 and click sell right now on this trade, and just keep watching. But for those that are in my mentorship, they know when to get in. So most of them got in at this point. Like I can literally show you my chart for those who are just getting maybe like 0.01 because I advise them not to trade it. I advise them not to really put too much risk on it because it's Monday plus US bank holiday, and we all know what happens once it's a major country's bank holiday. When I mean major country, I mean US is a major country, participation in this Forex industry. London is a major one, in fact, the biggest. And we go Sydney and Asia. So today happens to be US. So you have to be very careful while trading today. All right. So, well, analysis wise, whenever you see a trend line break right here, you're seeing psychological level right here, and you're seeing high of the week right here too, and you're seeing a chart pattern, M pattern. Now, let me show you what chart pattern I'm seeing right here. It's basic that it's clear that this is an M. Drop here, drop here. So it's supposed to start reversing right here, but it didn't. So we overextended. So from here, we should have a drop to the downside. So like something very similar to what we always have here. So we also had these similar M's. For you to know how powerful that pattern is, that's the pattern I talked about in one of my videos. I was able to move an account from $25,000 to $240,000 using this M and W pattern. Okay, but if it's for a W, W is to go short. Sorry, to go long. M is for short, not to go short. So you can see W and then go short. We'll go long right there. Sorry. All right. So that's how it just basically was. So even right here at this tip, when you saw this drop that happened last week, it was an M that we saw too that made him to as well going into this trade. So these are some secret things that you really have to know. So that's that on the charts. I'm sure everyone is getting along. So let me just go ahead and look out through some questions. Okay, good. Afsad Ibrahim said, already found and followed him. Good, congratulations for following Peter. Nice one. Thank you, Mr. Jeff, for assisting us become winning traders. Nice. Okay, now, so let me go over the mentorship for those who are still asking questions. So our mentorship is super straightforward. All you just have to do is head straight to firepipsfx.com. And also, if you want to chat us up first on Instagram to ask us questions, you are free to go ahead. You can go to firepips.fx. That's our official, that's our business page on Instagram. And our Telegram is just Firepips Signals. Everything, the links are in the description box. Check it out on YouTube. So if you want to be on the yearly mentorship, which is what I recommend, so you can have enough time, you settle down and not rush the process, it's $400 right now, $399 as you speak. So we have a lot of other payment methods that you can use. pay from. And if you want to just try it out for a month and see how, if it's meant for you, I mean, you can just select for the monthly, which is 9.9 for monthly package. And what I really love, because I'm really passionate about this business trading Forex, I have a free package for those who do not have any money, but you just want to learn how to trade regardless. So I have that for you too. So, but it's just basic entry level, of course, entry level. So you can learn what Forex is, what serious traders, what tools you need as a Forex trader, up onto candlesticks. So with this course, right, a free course, you are guaranteed of being able to place trade and exit trade profitably. You should be able to make, like, let's say $10, $100 to $100 every month for yourself. Okay, with understanding of everything. Market structure, Forex market, how margin, equity, MT for how to sign in trades, how to navigate through MT for your mobile phone, on Android, on iPhone, other types, stop losses, take profits, everything, trends, flats, everything that's as it with understanding Forex in the right way. Everything is right here. Okay, so but let me just give you things that you will be getting in the yearly mentorship, things you should be expecting in the yearly mentorship. So in the yearly mentorship, what you should be expecting, number one, you're going to be having access to our WhatsApp platform where you're going to be meeting like minds like Peter Osifo right here and many other who have been presenting before now, those who have been seeing comment here live to talk on Mondays. And also, you're also going to have access to my personal contacts. Here, you can chat me one in one, and you're also going to be having, which is really mind-blowing thing, live session. You're going to be trading and training together on Wednesdays and Fridays, which I think you shouldn't miss out on. So trade Forex mentorship or buying a course is not just about you just buying that course and going and start studying and start finding your way around it. All I'm saying to you guys right now, I'm going to be taking you by the hand and showing you what you need to do at each point in time. Another thing you also have to know is we have recordings at the back office. So all the recordings we have had ever since we started 2021 or October 2021, everything are at the back office right here. So basically, you can just navigate everything, all the recording. You're not going to be missing out on anything because we keep record of everything that we've been doing even before you're going to join us. All right. So I think that's a plus. And plus, you're also going to be having access to our flagship programs, have access to come feature here on our YouTube and so many other things. And trust me, and most importantly, you're going to become a profitable Forex trader in no time. All right. So these are many more other things that are so much available to you guys. So if this is something that you are really interested in, I mean, I'm not putting a gun to your head to want to do this. If it's something that you're really interested in, you want to take your business, your Forex trading career from zero to something else crazy, just join us right now, and everything's just going to be explained. So here is a sneak peek into the back office, the videos we have dropped. So we dropped a video on how to stack. Everything is right here. So I know this is one of the most commonly requested video people want to see. Talked about flexibility, when to change bias. Sometimes you might be in a trade, you are buying, and then later it changes to sell, and you're wondering, wow, should I just change to start selling at this point? So at what point should you change your bias? What point should you get that flexibility? Risk management, money management, psychology, how to back text, price action, all right, understanding TDI, chart pattern, continuation chart pattern. So it's not a regular indicator thing. It's something really detailed. Questions, really answering your day-to-day questions, things that you really face, problems you are facing every now and then in your chart. So we have live recordings, everything A to Z, because we go live for every Wednesday. So everything is recorded here. So sometimes it can be 2 hours long, 1 hour long, but if you don't want to go through that long route, you can just come to the short ones that we made available here. So this is just 3 minutes on psychological level direct. This is only just going to talk about psychological level. This is high and low of the week, 5 minutes. This is 8 minutes on trend line, 3 minutes like that, etc. So that's just a sneak peek of what we offer. So if you want to be a part of this, simple, click on this link right now and then start cashing out with the team. All right, start cashing out with the team. So let me drop the link right here for those who want to be a part of us in no time. So I'm really excited to want to have you guys on board. All right. So that's it for now. So click the link right in the description box and you can be a part of this too. All right, thank you. And so let me take a few more questions. I'm going to take some few more questions. That'll be all. Someone is asking, will you close the mentorship group after 1 year? No, but your subscription is going to expire after 1 year if you pay for 1 year. All right. The subscription from the WhatsApp group chat will expire. All right. So 1 year, you should have learned everything you have to learn. Someone is asking, no, don't Chukunon. So say, hello, please. I want to pay for 1 month. Will I have access to the whole program, including WhatsApp, For the 1 month, you're going to have access to Telegram. We have a special group for 1 month membership on Telegram, but everything remains the same thing. You're going to have access to everything that the yearly plan have access to too on 1 month, but for the period of 1 month. It's just duration that differs. Good, thank you. So, how many of your conferences validate your entry? If I see 3, there are always 4 conferences that I have 4. Keep your conferences short so you don't have too much confusion, distraction. So if I see 3 out of that 4, I'll take a trade. If I see 4 out of 4, I'll take the trade. Okay. So someone is asking, do you trade crash and boom? No, I don't trade any other pair except GBP USD. That does not mean all my mentees must trade exact pair that I trade. No, but I love to discipline my mentees to stick to 1 pair or restricted pair, few pairs. Why? Because I know that it cuts your journey by half. I mean, fast. If you can cut your pair to like 1 pair in 3 months, I can hit my chest for you. If I train you, you can be consistent in 3 months, start making consistent profit. If you can trade 1 pair. So I don't trade crash and boom. I don't trade volatility. I just trade professional Forex pairs because so that I'll be able to do that on my proprietary firm accounts and like trading with TC, Trader Central, my Forex fund, FTM1, the likes of all that. Okay, so I believe that's all for now. Someone is asking, what about beginners to cash out course? That's a one-off course. Now, here's the difference between the course. Course is just, I think, $70 right now. It's a pre-recorded videos that we've made for you. So if you think that's something that you really want to be a part of, it's fine. You can go on the course. But that does not mean you're not going to see me live talking to you. No. But we have a group for you to chat. But it's different from mentorship. Mentorship is where I take you by the hand and show you trade live every Wednesdays, 8 a.m. GMT +1, and on Fridays, 8 a.m. GMT +1. So that's what I do. And also note, if your schedule do not tally with these time zones, please also consider, make sure your schedules tallies. If it does tally, then that's when you want to follow me. Now let me show you, before I even go out of this live stream, our trade is crazily playing out. Let me show you what I saw. Now you can see we're having a huge crash right there. Can you see this drop? Sell. So whenever I tell you to sell, you know that, okay, I'm just telling you, I know some people are already messaging me. I can see my phone is buzzing right now. People are making crazy money on Telegram and also drop it on my Instagram. So do what to follow me on these platforms. You are definitely going to enjoy it. Just follow me. Can you see trade? People are already making massive profit. So with this candle, someone just became a millionaire right now. Somewhere, how? Somehow. Oh, you guys can't see my screen. So for some reason, sorry, just give me a sec. Trying to share. Sorry, that drop is massive. Can you see? Okay, so here's it. So can you see the screen around? So price is really dropping massively. So someone just became a millionaire through this candle. Someone just became a millionaire somewhere through this candle. So that's how trading is. It's all about sticking to your comp. At first, it felt that we were not correct because of this spike. So just like stop hunting, collecting people's stop. So if you know that this is 4 out of 4 conference, so there's no way that this analysis will not work. All right, even if it's not going to work, that's why we have our risk management in place. All right, I told you guys to risk little. Plus, it's holiday. Market is easy to be manipulated today because they're going to be a few participants today. Okay, because of the holiday in the United States. So that's it. How did I get this? This is not just about catching this trade right now. It's about replicating this result over and over and over again. So that's why I see people, they are really anxious. They want to take this trade right now. No, it's not about catching this trade. It's, will you be able to catch this trade whether or not Jeff tells you to do it or not? Can you catch this trade on your own? That's what is really important. I mean, Peter Osifo can do this on his own. Every other people on the channel, mentorship, they can do this on their own. But can you do it on your own? That's what's really, really important. Do you know when to exit? So if you really want to know about that, just go ahead with my free content on our website and start studying these things. It's really important, you know. Start with the free one. Then if you see that you really like it, then you may want to upgrade to the premium content. All right. So that's it on today's course, today's live stream. I'm sure you guys really enjoy your time as much as I do making these videos for you. So thank you very much for coming and sticking around. And bye for now, guys. Peace out.